This interview is for information only and should not be considered as investment advice or a recommendation to buy shares in the company featured. Welcome to this Stock Box interview.
Well, joining us today is Jason Brewer, who's the newly appointed Executive Chairman of Neo Energy Metals. Now, you were the non-executive chairman, Jason. You're now the executive, so it means you have executive roles, which is more responsibility. Tell me, first of all, why have you taken this role on?
Look, I work very closely on a day-to-day basis with Sean Heathcote, our CEO, and I think given the accelerated timeframe that we're now looking at bringing this project through to a development decision and through to a production decision, it requires the pair of us to be working very closely. Sean driving a lot of the technical aspects of the project, and me managing a lot of the more corporate side of what we're doing. So it gave me the opportunity to step in and give him the support, because it's going to be a very major and significant project development in South Africa and in the uranium sector as well. So it required, I guess, me to step up and give him that support.
Okay, well, of course, you've got, Marula as well, Shuka, Neo now, and of course, UMR that we talked about only the other day, Unicorn. You're taking on quite a lot here, Jason. You must be spread too thin, surely.
Surely not. No, Mark, let's be honest. This role is very specific at Neo. It's driving a lot of the corporate aspects. It's given, like I say, it's given time for Sean to really deliver on a couple of key things. You know, the resource drilling, making sure that proceeds. We've got a 6,500 meter drilling program, which needs to commence because that will have a very material impact on the underlying resources. We have the updated work to be done on the metallurgical studies. We have Erudite, a very experienced mineral processing group in South Africa, ready to commence that work. We really need to accelerate that work. And with that in mind, I guess that's a lot of work in itself to update a feasibility study that Anglo spent a tremendous amount of money on, as you recall, 30 million. So me being spread too thin, not really. My focus is this corporate aspect. You know, assisting Sean with the promotion of the company, assisting with a number of transactions which are running in parallel with the Henkries project to allow us to also increase our resources adjacent to the Henkries project and a bit further afield in South Africa too.
Okay, so you will be the guy I speak to with regards to Neo going forward. Of course, we were quite keen to be following that story. It was at the listing with you as well, and Sean, of course, at London Stock Exchange. The first IPO I'd been to is all quite exciting, but it's been extremely quiet. I don't think we've spoken to Sean at all, at anyone at Neo, since that event. So, I mean, what's actually been going on? I hope it's not been nothing.
No, of course it's not been nothing, but it's for me personally, it's disappointing that there hasn't been that flow of communication with yourself and the opportunity to let people know exactly what is happening.
Okay.
Sean's down in South Africa this week, so a lot of that work is on the mobilization of the drilling contractors.
Okay.
The process of appointing the drilling contractors to complete that resource expansion drilling, another 6,500 meters of drilling. You've got to remember here, the drilling on this project is not diamond, it's not RC. The mineralization is sand hosted. So it's a very different drilling method, and one where there really isn't that many drilling contractors that can perform that work. So that's been a process, getting one shortlisted and appointed. And then in addition to that, you've got the metallurgical work on the processing. Anglo-American, who had this project, as you'll recall there, Mark, did all the feasibility study work, but that was done in the 70s. And there's been a tremendous amount of improvements across the whole metallurgical processing of uranium ores since that time. Mm-hmm. So whilst collectively they spent over $30 million on this project, $30 million on this project, we have to update that work. And that is a lot of work which has been going on in the background. We've had 4 shortlisted parties to do that work. That now has been finalized, and the appointment is to be announced shortly of who that group will be and the extent of that work. So that really has been the main focus there. And like I say, will really allow us to deliver that updated study work over the course of 2024.
Okay, so you'll get that updated study out over the course of this year here. 30 million spent by Anglo, that's an awful lot. I wonder if we can just perhaps go over, just refresh what the project's all about. It's uranium in Namibia, isn't it? And a lot of historic work going on. Why did Anglo drop it?
Look, it's just, Mark, you'll know where our Blesberg project is. So it's actually just on the other side of the border in South Africa, so very close to that Namibian border, which is home to some of the world's largest uranium mines. So we are located about 30 kilometers from Marula's Blesberg mine. So there's a lot of, I guess, shared infrastructure opportunities that we can look at. But Anglo-American in the early 1970s did a full feasibility study on this project. It's very shallow, relatively high-grade uranium mineralization, which is sand-hosted. So from an operating cost point of view, no drilling and blasting, very simple. You're effectively mining sand, you're quarrying. For the mining engineers out there, they would be disappointed if they got the gig here at the Henkries project, because it is a very simple mining project. When Anglo had this project, they did the full drill out of the resources on less than 5% of the project area. So you've got mineralization which extends across the license here for over 28 kilometers. And they focused on just 5% of that. The new resource drilling that we're doing is extending along that 28 kilometer defined mineralization. So we're expecting a very significant upgrade there in resources. When they went to the mining and the processing side, they operated a pilot plant, for several months continuously with mineralization mined from almost 100 test pits. So they really did a thorough job. Unfortunately, when that feasibility study was finished, and which was a very positive feasibility study, you saw the uranium price absolutely tank, go absolutely fall. We are now sitting at uranium prices which are 4 to 5 times where it was back then. So we're in a very positive uranium market, which everybody knows. So with Anglo-American, they did a lot of work, but at that time, in the early mid-70s, when the feasibility study was completed, they pulled back from uranium altogether. And as a result of that, this project was then relinquished. It was picked up by another couple of mid-tier uranium companies in the short term. But we've picked it up now. We listed, as you know, from being there in November of last year. And we've put forward a proposal now to take this through to a production in basically within 2 years. So a feasibility study updated within the next 12 months, and then first production within 12 months of that.
Okay. And they dropped it because it was purely uranium prices at the time. The market was just not there to make that project economically viable.
100%. It had nothing to do with the underlying technical merits of the project, which remain to this very day. So it was one of broader markets and one of, I guess, a corporate decision to withdraw from that uranium sector.
Okay. And what was the resource that they'd come out with on their PFS?
They had a non-JORC compliant resource there of about 10 million pounds.
Okay.
When we listed, we pulled that back under JORC standards to about 4.7. We've got a number of what we call exploration targets, which is effectively the difference between their historic resource and our JORC compliant resources. And we're expecting over the course of 2024 to substantially increase the resources here to multiples of what it's sitting at the moment.
So that's what your goal is now. You want to take that 4.7 JORC, maybe not get it to the 10 million, but get it moving up anyway.
Well past the 10 million mark. Well past that. When you think that this is only on 5% of a 28 kilometer mineralized zone, which has been defined through a number of programs of work, not just by Anglo, but by subsequent junior mining companies, but also by South African Geoscience, when they did a number of the surveys there, which confirmed the extent of that mineralization. But it just hasn't been drilled out. And you've got to remember here, Mark, the mineralization is within the first 8 meters from surface. So you're very shallow drilling. So we're drilling 20, 25 meter holes in sand. So you're punching these holes out relatively quickly.
So that's what's going on now. You've got 6,500 meter drill program. It's being mobilized at the moment with the objective to grow that JORC resource. You talk about MET studies as well, metallurgical studies. What would they entail? You're looking at how you could leach the uranium and get it into a concentrate.
Exactly. What happened previously, there was the full study work done by Anglo, up to feasibility study levels. As I said, the work which was done back in the 70s, whilst in good standing, needs to be updated, not just from a cost perspective, but in the improvements that have happened in terms of uranium, metallurgical recoveries, and so on. So we're going to be appointing erudites to complete that work over the coming months. That will require more bulk sampling, more recovery test work, and more leaching test work, which will have completed in South Africa, and which we expect will not just confirm the previous work, but will demonstrate the improvements in metallurgical work in the uranium sector and result in increased recoveries and lower cost profile too.
Okay, so in terms of big news events coming up, we can expect to see an updated resource. We can expect to see some results from the metallurgical studies. They have to start first of all, obviously, but then you want to get to what you're going to the DFS. Is that what you're going for? And you mentioned getting into production within 12 months.
Putting out in the interim to demonstrate the underlying strength of the project economics is in a quick preliminary economic assessment, a PEA report.
A PEA.
On the initial current resources, expanded resources, and to give people an idea of the cost profile which we can expect. When we look back at the Anglo work and some of the subsequent work that was done, we were talking about all-in operating costs in the low to mid-20s. So US dollars, $20 to $25 per pound. Now, that was your all-in costs on site. You then compare that to prevailing uranium costs, which are in that $90 to $100 per pound mark. It's a very robust project from that perspective. So what we want to do is come out with that study to basically confirm that to our investors. But then we will move forward. And I guess part of this comes from our major shareholder, one of our major shareholders being QGC. And Mark, you had the chance to speak to Quinton at the listing there and get his views on this. With his support, with his mining teams, and with the capital that he has behind him, we are going to then move forward to basically go straight through to a DFS and to a design stage. So we're going straight through and making that development decision within these next.
Okay. And did you say you want to get into production within 12 months?
No, the development decision within 12 months, and then with the construction to occur over the subsequent 12 months. So within 2 years, we expect to be producing from the Henkries uranium project.
Within 2 years. Okay. And what could it look like? You say it doesn't require big capital expenditure, doesn't require a big infrastructure on site. To explain how it could look like in terms of extracting this resource.
£1 million. What we're looking at is a minimum 10-year mine life producing a minimum £1 million of uranium mineralization. That's what we're targeting there. Now, the capital costs associated with that, we've still got the final test work to do there. One of the benefits that South Africa has, it has historically been quite a significant producer of uranium. The majority of that uranium has come out of the gold mines, actually, rather than a dedicated uranium mine. So there is actually within South Africa a lot of downstream processing plants available to process and upgrade the sort of production profile that we've got. So for instance, you've got Sibanye, Stillwater, that have got uranium resources and infrastructure there. I think their resources are about 80 million pounds of uranium. You've got Harmony, which everybody knows as being a gold producer, but they also have uranium processing facilities. So what we're doing, and I guess part of my role as well, is to look at the broader opportunities for NEO to establish itself as a larger player in the uranium sector in South Africa. And that'll mean looking at other companies' resources where they may not be core to them. As you know, both Sibanye, Stillwater and Harmony are more gold and precious metal producers as opposed to uranium. And leverage off of that opportunity there. So we're looking at ways of growing this business, not just on the back of not just on the back of our Henkries project, but on the back of other uranium assets, not just resource, physical processing assets in South Africa. And that could accelerate NEO's position as not just an explorer and developer, but as a producer too.
Okay. Well, you mentioned a 10-year life of mine, hoping to get over £1 million out of this. But what could it actually? Are we talking open pit? Are we talking excavators going in and scooping out oil? It's in sandstone, so it's quite soft material.
I think more detail there. The majority, as I said, of the uranium mineralization here is in the first 8 meters, and it's all hosted in sand. So there's no drilling or blasting. It is an open pit, but it's more like a quarrying exercise. So it's earth moving. So you're not drilling and blasting, loading and hauling. You're actually moving sand to expose the uranium mineralization, which visibly is very clear. So you can actually differentiate it very clearly from the other sand that's there. So a very shallow open pit operation, which will be using, again, excavators, articulated dump trucks, etc. So nothing out of the ordinary there. And that material will be then feeding us a very standard uranium process. So yes, something which from a mining perspective is about as low risk as you probably can get from that. From a processing perspective, there's been a lot of work done, but that now needs to be updated as well.
Okay, and in terms of your timeline then of 2 years, how do you think that fits in with the play of the uranium prices? You don't want to get to the 2-year point and see them dropping off. I mean, I did do a podcast with someone the other day on uranium, and we were talking about the third bull cycle. You know, and you have the peak and you have the second peak, and the prediction is obviously the peak's going to be much higher. What's your take on how the demand for uranium and how prices are going to hold up for the next 5-10 years?
Look, I think from our point of view, the pricing environment we find ourselves in the moment really requires us to accelerate the development of this project. Yeah, you've got to take advantage of it. And we've got a project which allows for that. So I don't think there's any analysts out there which over the next 3 to 5 years see that uranium price coming off too far from where it's at the moment. So you've got a window of opportunity here over the next 5 years to build a very low-cost uranium producer. And I think that's what we're focused on, getting margins of 100, 200% based upon what we've seen in our operating costs. That really can sustain quite a long-term business. And particularly with some of the licenses and mineralization surrounding Henkries up there in the Northern Cape. Once we have a processing plant and that initial mine development going, I see it being a very central hub for other resources to be developed on a satellite mine environment, with those resources transported through to Henkries for processing there. Okay. So from a uranium market point of view, I think our timing is very good. I think the fact that we have a short time frame to market, to actually to be producing, is fantastic. I don't think there's too many companies out there with this sort of a production time frame in any way whatsoever. A lot of the focus for uranium has been in North America, on the Athabasca Basin, and rightly so. It's the highest grade uranium resources you'll find in the world, but they're at depth and they require significant capital to develop them and explore them, to drill with them. You're getting people drilling hundreds of meters there to intersect mineralization. Here, you're drilling from surface in sand. So it's a very different risk profile, and on the back of that, cost profile, and on the back of that, development timeframe profile too. So I think NEO brings so many advantages to investors that are looking for that uplift in exposure that we're going to get over the next 12 months. If you see what's going to come, I think it's second to none in that regard.
Okay. Well, thank you very much, Jason. Good luck in the role. I'm sure we're speaking, well, I hope indeed we do speak a lot more so we can really start to follow the developments there at NEO. But thank you for now for your time.
Mark, no problems. And yes, you will certainly be hearing from me very soon.
If you enjoyed this interview, then give us a thumbs up, a like or a retweet. Subscribe to us on YouTube or follow us on Twitter and hit that notification bell to be the first to know when we release new content. There's loads of great content on our website too, across all our programs at stockboxmedia.com. Thank you for watching.